Hi there everyone, good morning and welcome to the market. I'm Avandabash, with me Nikunj Darme as well as Anisha Jain, and this morning we're staring at a pretty choppy globe. You've got all the major averages that wrapped up yesterday's trading session on a pretty slippery slope, and actually that's largely on the back of the treasury yield, the 10-year treasury note hitting 4%. That rise in the bond yields has now caused a lot more concerns of larger than expected rate hikes from the Federal Reserve, and that really seems to have fueled investor concern. Yesterday we managed to wrap up the day on a pretty comfortable note around the 17,450 mark. But given the fact that you have a weak global handover, and in particular the spike in the bond yields, Nikunj, what does that spell out for us?
No, it's the extension of what we've been discussing, Avan, that look, globally there is a change of narrative, there is a change in terms of positioning, and now there is a realization that interest rates are going to be moving higher, and high inflation is real, and high inflation is going to be high for a long period of time. So whether it is a spike in the 10-year yield, whether it is the uptick in the European treasury paper, the realization that interest rates will move higher is having impact on the positioning of the macros and the bond market. The dollar index is not at 103, it is way above 104. So that in a sense now seems to be this niggling fear in terms of how the positioning for emerging markets would change, and how in a sense now the positioning for global markets would change. Markets are not disturbed, but markets are not getting enough positive triggers which were supposed to be at play with the assumption that interest rates will peak out. So I guess it's not a reversal per se, but it is certainly an indication that next couple of months or couple of quarters we will have to again fight the ghost of high inflation.
But you know what, there might be a bit of repositioning happening across the world, but at least for India, March started on a positive note, because after 8 sessions of declining trend, finally yesterday we broke out of that losing streak and managed to end in the green, and comfortably so, with a 150-point gain. And there was quite a bit of recovery in the Bank Nifty as well, and the technical experts have been talking about how there's a short-term bottom perhaps which has been made for Bank Nifty, and that really remains interesting. Though FIIs, they continue to sell in the Indian market. It was the 6th consecutive session that we saw the FII selling come back. Nikunj, yesterday there were a few data points which were positive, whether it was the upgrade coming in for the Indian economy from Moody, or the PMI data which was positive, the GST data which came in at 1.5 lakh crore rupees. But yesterday's price action, would you call it short covering, or would you think that there's a reversal of trend now?
Okay, there are too many parts in that question. First, is the data constructive? The GST data I think is very impressive. Auto sales data, again an indication of domestic demand, not bad at all. So one side you've got parts of the economy which are slowing down, but one side you've got parts of the economy which are doing rather well. So it is not a universal slowdown. It is not a universal acceleration like 2021, and it is not a universal slowdown like like what we saw, let's say, in 2018 or 2019. What is important here is, let's first talk about the Bank Nifty. The Bank Nifty has managed to find support at a key level. B, the FI positioning in the market is very light. With each passing day, the FI positioning now is nearing almost 13-14%, which is remarkably low. Has the Bank Nifty found support, or yesterday's price action is just a bout of short covering? I think that would be tested today and tomorrow. See, markets are oversold, so they were due for a bounce. So I'm not surprised with yesterday's bounce. What matters now is that the combination of ICICI Bank and HDFC Bank, what will happen there? And now that you've heard from Axis Bank in middle of the quarter in terms of where they want to take their corporate strategy forward, that stock in a sense today would be reacting to the comments which have come from the management. So these 3 stocks for me really hold the key for the Bank Nifty per se. More than the banking sector per se, I think it's a Bank Nifty, and these 3 horsemen, if I may use the word, will in a sense be the trend indicator. So if the Bank Nifty finds support from these levels, I think that's great news. The interesting bit is that just when we thought that IT was out of the woods, up comes the bond yield, up comes the spike, and there's a macro ripple. And typically when there is a macro ripple and spike in bond yields, IT and growth stocks don't do well. So could it be going back to autos and banks, which have outperformed for the better part of 2022? Could they start coming back? Very early days. But the Bank Nifty for a trader, I think, is an instrument of choice which we need to monitor.
Yeah, and we have seen quite a bit of resilience. As you said, that outperformance in the Nifty Bank has been evident in the short run. But that being said, the FII's relentless selling does continue. 5 straight days on the trot that we've seen a net sell figure. But the cluster of stocks that certainly stole the limelight in yesterday's trade were the Adani group of stocks. The fact that we have seen quite a stupendous recovery from the 52-week lows. We did have the market cap of the entire conglomerate rising by about 44,000 odd crores yesterday, and in the last 2 trading days that would take the tally in market capitalization to about 74,000 crores. But still, given the fact that, Nikunj, there was an erosion of about 11.6 lakh crores since the end of January, there still is a long way to go for that recovery.
Look, to imagine that Adani group of stocks will go back to the glory days, I think it's next to impossible, at least in the near term. You never say never in market, but here I'm going to stick my neck out and say that this is not going to happen in the near term. That's for sure. Let's look at the price action. They've stopped falling and they've started rising. If the Adani group of stocks, they become stable, not in terms of participation, purely in terms of in market curiosity, they are important stocks, because that in a sense, this group in a sense is a big group. This group in a sense we know has a psychological rub-off in the market per se. That's one. B, now that these stocks have stabilized, some would argue this overhang what lenders were hit with, the banks would give a loan to Adani group of companies, they will also start outperforming. So there were two factors at play when Adani group of stocks fell. First, what will happen to the market mood, and B, what will happen to the impact, what will happen to lenders. So I think both those factors are gradually getting addressed, and markets by and large are moving, they've moved on. So if the Adani group of stocks were part of every second market narrative, I think they are only part of the partial narrative now. So if you're watching the screen, what matters to you right now is not the fundamentals, the technicals. I don't think these stocks have reached at a level where you could say that I want to be a buyer, because there is a lot of news, there's a lot of clarity which is still required before you get the right value. But what matters is that technically how these stocks are positioned. Adani Port, according to Kunal, is still overbought. Ambuja Cement is mildly oversold, and Adani Enterprises has seen a oversold bounce. So somewhere if you have to look at the one which is standing out technically, I think could be Ambuja, could really be Ambuja, which in a sense has got pushed around here and there only because it became a Adani group of company.
Otherwise, as the experts have been pointing out, Ambuja remains a very strong business as well. And talking about strong business performance, that's what we saw from the auto sector yesterday as well. It was largely a better than expected show coming in from the auto companies. There you have it on the screen. There were only two disappointments coming in, largely for M&M Auto Space and Tata Motors PV. But other than that, you had Escorts, Maruti, etc. that managed to report better than expected numbers. And more importantly, the commentary is also on the positive side. Escorts, for instance, says that the demand momentum continues to be quite strong. For Bajaj Auto, export has been showing a bit of a sign of improvement, because on a month-on-month basis, we have seen improvement to the tune of 13%. Maruti talked about how the supply side issues are also abating, so the component situation has improved quite a bit. And M&M also talked about how the new launches have been doing quite well. Nikunj, you were alluding to the fact earlier that auto was the space that outperformed definitely in 2022, but looks like it's still getting that consensus buy coming in with respect to positive performance.
See, there is expectations and then there is what they've delivered, right? So expectation for auto was not bad, but on top of, within that expectation, I guess CV is the standout, the standout cluster for me, because the CV sales have been strong and the CV commentary is decent. Then you move to two-wheelers, where there is definitely a tinge of disappointment, whether it is on the Eicher numbers or what we're getting from Hero MotoCorp. So Eicher in a sense did not perform very well again, but these are monthly numbers. And then Bajaj Auto and Hero MotoCorp, they've got their own challenges. One has got export, and second is trying to struggle to get the rural demand back and get their feet into the entire electric space. Passenger car vehicle space, PVs are still growing. You may talk about the market expectations versus what they've delivered. There's a minor miss here or there, but what is important is that the sector is growing. So for me, auto is an important indicator of what the underlying contours of the demand are. And if auto stocks have done nothing in last couple of years. So if you frankly ask me that what really could be the sector of the year, like last year it was banks, it was industrials, defense, I get a sense that in this year somewhere, auto is going to be that sector which has potential and room to outperform.
All right, so we'll be watching out for the auto sector. Nikunj believes that there is still room for outperformance. But let's move right on then. The IT story is much bigger than we think. That's the word coming in from Motilal Oswal's chairman and co-founder, Ramdev Agarwal, where he talks about individual sectors where he sees outperformance and the view on the markets being in a range.
Right now, the largest profit pool in India, which is growing also, is that of banks, financial services, and second is the IT. Okay. IT has had the most dramatic profit pool expansion from 2000. In 2000, it was not even a percentage of the total profit pool. Today, it is more like 15-17% and growing. And there is no year when it has not gained little share. So, my sense is IT story is much bigger. You don't have to stick to the current set of those top big companies. They might give you 10-15% index return or something like that. But below that, there will be a lot of companies which will try to come into the big league. So there will be mid-sized companies which will, because the economics still remain great. And then you have the new set of kind of small companies which are coming up, product companies, AI companies, and so there will be specialized services companies which will be coming up, where the cost structure is in India and the clients are all in US and Europe. So I think that business model has huge potential. We have done in last 20 this is a 23, 24 years story of Indian IT. And first $100 billion took about 20 years to get it. And next $100 billion came in just about 8-10 years. The third $100 billion, I'm not talking about a small number. Third $100 billion, I believe, is going to come in 4 to 5 years. So that's the nature of expansion. And there, the players who are going to be disproportionately large, I think they'll make it. And we should be aligned to that.
Okay, time now to welcome our chartists on board. Naresh Mirani as well as Kunal Bothra as always join us to talk to us about the technicals of the market. Kunal, hi, morning. Just wanted to get a sense from you that yesterday we saw that we came out of that 8-day losing streak. We were forming lower lows, lower highs for the last 8 sessions. But yesterday, the indications were that a short-term bottom has been made. Would you stick your neck out and say that that bottom has been made?
Good morning, Anisha. So, in fact, day before yesterday, in the second half of the market, we indicated that the markets, especially the Bank Nifty, is making a huge bottom for itself, and there could be a very strong risk to initiate a buy on the banking index. We went into a buy mode for the indices yesterday as well, and my sense is that there could be an upside of at least till 41,000 odd levels for Bank Nifty. So, 40,800 to 41,000 levels. This is a good zone where traders, short-term traders who are expecting a bounce, they could try and lock in their profits, because the market texture is still into a bit of a wobbly zone. I call it that because even, for example, yesterday when the banking index was doing exceptionally well, there were a lot many large cap private sector banking stocks which were still not performing. The performance for many of these private sector names was under par the performance of the benchmark index for themselves, that's Bank Nifty. So that is the concerning point, that the health of the Bank Nifty or the internals is not as strong as what we probably would have expected. But I think this is a move which is happening on the back of some extreme amount of short covering. At least the first half of the day yesterday indicated a great amount of short covering on the banking index, and that could probably propel the index higher by at least another 300 to 400 points. So would maintain that bullish stance on Bank Nifty as of today, but I think at 40,800 to 41,000, it's a good zone to book out profits.
All right, so continuing to maintain that positive bias when it comes to the Nifty Bank, so keep tracking those levels that Kunal flagged off. Morning, Naresh. Given the cues that we've got yesterday, the fact that we managed to snap that 8-day losing streak, what's that indicative of? And do you also believe that the large heavy lifting is going to be done by the Nifty Bank index, which has recovered quite tremendously from its 52-week lows?
So yesterday's recovery, the good part was all the indices, the broader markets, the mid cap, the small cap, the Nifty, the Bank Nifty, all did well and all did almost that 1% move. At the same time, even though the heavies like Reliance Industries and HDFC Bank did not participate. So a very strong broader market recovery that indicates say a follow-up move could continue over the next few sessions. And we are forming that range wherein 17,250, 300 continues to hold. And 17,800 to 18,000 could be the upper band. So overall, Bank Nifty has done a good recovery, and we have yet not seen HDFC Bank do well. So overall, Bank Nifty still looks interesting in that PSU banks have created a short-term bottom. We've seen a recovery even in Kotak Mahindra Bank. So Bank Nifty could continue to lead. The space I would be watching out for is the next sector, which would be in the financials only. It would be NBFCs. And that is where the next trend could come in. So the mid cap and small cap NBFC names look very interesting.
So Naresh has been spotting the trends from you from oil and gas to the banking space to now NBFCs. These are the top spaces that he is liking at this point of time. But let's quickly get going and get some of the stock recommendations also from our chartists. Kunal, you go first. What are the cracker stocks that you're recommending for our viewers today?
So it's from the energy space, two buy calls. First one is ONGC, a stock which you've been bullish on. Ex-dividend, the stock is at 154.55 levels. So looks attractive even from current zone. Targets of 170 is what I would maintain on the stock price. Stop loss could be kept at 150. And IEX, Indian Energy Exchange, that's a stock which has given a breakout. In fact, it's a classical flag pattern breakout below the 200 moving average. Generally, these kind of trend indicates that these stocks are getting into a first stage of a strong uptrend. So would be bullish on IEX, targets of 160, stop loss 141.
All right, watch out for those interesting recommendations, ONGC and IEX. And Naresh, Kunal's already taken ONGC, so will you be picking out that stock as well? Because I know it's a favorite.
Yeah, so continues to be the favorite, continue to like the oil and gas pack. So the first is a buy on Coal India with a shorter term view. Now, Coal India has been sideways relatively and has not participated but did not see a correction as well. So a very tight range formed over the last few sessions. If we look at the bottoms, it made a bottom at 210 in December as well as Jan, roughly 210 to 12. And now it is on verge of a short-term range breakout of the last 2 weeks, about 219 to 20 levels. I would expect it to move towards 235 in the short term, a stop loss to be kept at 213. So the PSE basket still looks interesting, oil and gas. Same thing comes for ONGC. The stock has given a breakout above that 154, 155 mark, add up 4 rupees of dividend. And the last time it topped out around 154 was when the windfall taxes got announced and saw a quick crack to 120.25. When such a 15% knock off in 3 days happens and those prices are taken out again, that generally is the start of a much bigger uptrend. So for now, an initial target price could be 170, but going forward, we'll look at it as a 200, 220 rupee stock.
Okay, so ONGC remains the consensus buy, but time now to slip into a very short break with the news that the SGX Nifty for now is not suggesting a great mood. It's just hovering around that 17,460 thereabouts. We'll track that when we come back after this small break.
Hampers me. The next gen MG Hector. It's a human thing.
When it all began, I had only a few runs on the scoreboard and fewer spectators in the stands. And then what? I worked harder, and that's how from Saurav, I became. When you live up to expectations, then winning people's trust is possible. And trust results in Bandhan. Like Bandhan Bank. Aapka bhala, sabki bhalai.
Welcome back. Still tuned into the market. Let's focus in then on IT and on the sidelines of the NASSCOM forum. Anisha caught up with KPIT's co-founder and CEO, Mr. Kishore Patil, who remains pretty confident about the deal win scenario as well as KPIT's growth prospects in the long run. Let's listen in.
We see good business environment, and just in the month of April we will probably give some outlook for the next years. But as I said, overall the demand environment looks pretty robust. I think we see a reasonable demand environment across, and naturally in some time, like last 3 years, 4 years, Europe has been growing very fast. We expect it to continue, but I think maybe Asia will pick up soon. I think what we are focusing on is now quality of hires more and more. That is what our focus is. I think overall the demand environment is good and the supply environment is stabilizing.
Rising attrition was a big concern for the industry last year, especially amongst the freshers joining the IT industry, with the rate of the fallouts of freshers being very high in the year gone by. So what are the IT companies now doing to curb it and build a better work environment to retain the freshers? We spoke with the president of NASSCOM, Debjani Ghosh, and this is what she had to say.
Culture is something which is very unique to a company, and I think a company absolutely has to focus on building its culture, especially in the hybrid environment where it becomes even more challenging. But it's very important to ensure that these young kids who are joining your company are not just seeing you on Zoom, but are able to meet each other, are able to build that, connect with each other. It's extremely important. So we are strongly recommending a hybrid model to the industry and not full remote or not full in person, which will allow companies to figure out how to build culture with these young employees who are joining.
All right, moving right on then, let's put the spotlight on Bajaj Finserv. The company has received the SEBI license to start its mutual fund business. Let's understand a little bit more. Sharad joins in. And Sharad, what's the impact of this on the existing AMCs?
Well, yes, a big fish is entering the Indian mutual fund industry. Bajaj Finserv has received SEBI approval to start their mutual fund business, and they have also got the regulatory approvals to start it. Apart from this, the company itself will be the 43rd player in the Indian mutual fund industry. And apart from this, the people helming at the top, of course, the CEO would be Ganesh Mohan. He's already part of Bajaj Finserv for last 8 years, and he has been the head of corporate strategy. But the person who will be managing the funds, the CIO, will be Nimesh Madan. He's an ex-head of research or investments and equities at Canara Robeco AMC, and also is having leadership experiences in the mutual fund industry spanning more than 2 decades. Now, apart from the management itself, the management commentary from Bajaj Finserv has also been strong, and they'll be catering to both institutional and retail clients for the mutual fund space, and they'll be also focusing to provide all digital capabilities to give a complete financial product suite as well. Now, the impact what can be there for the other AMCs and especially the listed players would be actually in focus today in day's trade, would be a greater competition would be there, and already there is a pressure happening on the yields as well, as more new fintechs are also getting licenses in the mutual fund space as well. So the competition is heating up, and of course when a bigger player comes in, there might be a loss of market share expected in both equity and debt categories because of the distribution points and the way the scale Bajaj Finserv operates in. So of course some pressure is expected for the other listed AMC stocks as well. But now let's look at which are the largest AMCs in India in terms of average capital. Now of course the important thing is SBI Mutual Fund is having 8.65 lakh crores of AUM, which is followed by ICICI Pru and HDFC Mutual Fund. And despite the market volatility, there is a strong support coming from the retail investors, and if you see the market AUM as well, that is still at overall at record levels for the mutual fund industries, going above the 40 lakh crore mark.
Okay, so one more player entering the MF industry, 43rd to enter, so quite a bit of heated space. But on to some fundamental ideas now. Listen in to Daljit Singh Kohli, the CIO at StockAccess.com, on his top betting ideas on the cement sector.
Cement companies, we are very bullish. I think the two stocks that we like are Shri Cement and Dalmia Bharat. Both of them have given good returns also, but we still continue to maintain positive view. Even Ambuja has come to a very attractive level of 325, 330 levels. This is the place from where it is actually started prior to all this news flow from the group, which is under a lot of scandal that came into. So we think that the cement itself will do well, very well, from both the sides. Realization is also going up and the input cost is coming down. Some of the benefit will be shown in this quarter when March quarter numbers will come, and some more will flow into the next quarters also. And most of these companies have also gone for waste heat recovery and all of those things that will also add to their cost savings.
All right, Dipin Mehta, good morning. How are you feeling? Markets, do you think this susti will continue? That's the right word. I was looking for actually a right word. I mean, I'm used to, it's, if I say range bound, if I say not going anywhere, we've been using this word. So I thought I'll use a Hindi word today. Market mein susti, kab tak chalegi?
Yeah, good morning, Nikunj, and thank you very much for having me on your show. ये तो कहना बहुत मुश्किल है कि सुस्ती कब तक चलेगी, but all we can say is that there are worse challenges than we thought earlier, and the big problem really is with the inflation and interest rates. And what we are seeing just now is a compression of the price to earnings multiple, and how long that plays out and how deep that can go is very difficult to estimate, because price to earnings multiple in itself, although a quantitative number, has many qualitative variables behind it. So very difficult to say which way the market trend will go ahead. But all we can say is that the fundamentals are still intact. Look at the GST numbers, the auto sales numbers, all the momentum indicators are still positive. And many sectors are in what I would call a multi-year bull situation or a positive trend. And that I think should help earnings going forward. So we just need to ride out these tough times and wait for interest rates to settle down and then perhaps start declining. And that's where the trigger will come, and you will see inflection point and the market turn around from the sideways or to slightly bearish phase to a more bullish phase.
Dipin, economists are talking about slowdown now. Markets have been in a sideways mode for last 18 months. I mean, markets have this unique ability of catching what is coming next. So can I say that it could be a classic buy the rumor and sell on news kind of a theorem again, which is that markets have already priced in or baked in a lot of slowdown, which the economy now seems to be reporting?
Yeah, in a way, these two correlations are a bit difficult to really get a handle on. And as I said, I think the bigger issue is not the slowdown from the Indian stocks perspective as much it is the interest rates. And interest rates are very closely linked to price to earnings multiple. I think if you look at last 3-4 quarters or so, earnings have more or less been in line. Analyst estimates also have not been cut. In fact, many instances they have gone up, but yet stock prices have gone nowhere or have declined. So what we are seeing is that the price to earnings multiple is where the hit is coming maximum. And the whole situation was was in reverse mode 2-3 years ago, where earnings were going nowhere, but stock prices were moving up. And that was a period when the interest rates were very low. So I would just like to focus on this interest rates, global interest rates, local interest rates, before I can say with conviction that the market has bottomed out and we can see a rally from there on.
Okay, now here's the push-up challenge with the founder of Zomato, where ET Now challenged Dipinder Goyal to a push-up challenge. Let's remind our viewers about, we'll revisit this push-up challenge and then I'll come to Dipin Mehta after this. There you go, let's see it again.
जोर लगा के हलिया जितनी उम्र उतनी पुशअप Batch 1 views.
Anisha, who won?
Performance.
We're Team ET
Team ET
now.
now,
Nikunj.
exactly.
Team Zomato is insisting that my form was off. My hands were slightly wide.
Yeah, so losers.
Exactly. You got to call some of our old friends there now and tell them.
There seems to have shifted the team, but we'll remind them where the loyalties lie.
Dipin Mehta, I know you're into marathons.
I don't think
so
you want to compete with Dipan Mehta. Oh,
that's
yeah.
what I'm saying. So there's a push-up challenge which we did. Now it's the next one coming your way, which is a marathon. By the way, what was your number this year? Half marathon?
2 hours 28. 2
Oh
hours
dear,
28.
I'll have to train for 3 years to beat you, Dipan. I take my challenge back.
But you are in very good shape. And Nikunj, what comes to mind is that Dipinder also is in very good shape. And if your CEO is in good physical shape, it's not too long before the company also starts to reflect that kind of health on the financial front. And I'm very positive on Zomato. I think they are pushing the right buttons over there and they are getting their strategy right. And at some point of time, whenever there is complete visibility of earnings, you will see a big re-rating in the stock.
Dipan, what got at least our attention, when I say our attention, ET Now's attention, was when you spoke about a plan in place to have $1 billion profit by 2030, 2031 for a company which is struggling right now. I mean, struggle is not the word, for a company which right now has adjusted loss. I'm using the word adjusted profit and a net loss. If they have a path to profitability where they're thinking about $1 billion, I wonder what will happen to the stock then.
Yeah, absolutely, absolutely. See, the thing is that these are companies, I've always told you, Nikunj, if you want to buy a 10-year stock, which I had bought, say, 10 years ago, the stocks I look at which gave maximum earnings were the ones which had a sustainable business model and a large footprint. And Zomato, I think, certainly checks those boxes because in 2030 also, we will still order food. I think it's not going to get downloaded on any app or something. And food delivery will still remain very much relevant. And by then, they would have built even more moats around their business. And this duopoly, which is there in Swiggy and Zomato, that will remain even in 2030, I think. And if they keep on doubling their business every 3 years, then in 8 years' time, they would be 3 times their size. And at that point of time, it can be extremely profitable because the costs will not go up at the same rate as the profits, as the revenues. So I think that the potential is there for the company. But they do not have to make mistakes, I think, or at least they have to manage their capital better. Because I'm not that optimistic on this Blinkit acquisition. I think maybe it's a bit too much for them to chew.
Let's see how the Blinkit acquisition pans out. That does remain a concern for a lot of sell-side analysts as well. But yeah, capital allocation is one thing that we'll watch out for Zomato. But I wanted to shift gears, Dipan, and talk about the defense sector. Hindustan Aeronautics, for instance, will be in focus today because there's an order win of around 7,000 crores. There's also talk about how the company might get included in MSCI come May. And of course, dividend play is something that continues to be the case for a lot of these defense names. Would you still be a buyer as far as HAL, BL, etc. is concerned?
Yeah, absolutely. I think these companies are on a roll, and recent interaction with the ex-army general suggested to me that they are going very, very strong on indigenization and procurement of all capital assets as far as the Army and Navy, Air Force is concerned, from as much as possible from Indian companies. So it's a huge opportunity opening up. It's a multi-year opportunity. And this order flow is going to keep on increasing for Indian domestic defense companies. There's a great export opportunity as well, where they haven't even scratched the surface now that technology and products are at international level. So you may have a soft quarter or two because end of the day, these are businesses which are like in the sense of a project, in the sense that when they deliver a large equipment, those quarters are good, but there are some quarters where the work, the kind of progress made on specific projects may not be as high. So if you're able to live through some amount of volatility in their earnings, I think on a 3 to 5 year basis, these companies can deliver very good returns.
Well, yes, so near-term choppiness is possible because of the quarterly earnings moves, but definitely a long-term story. In fact, let's go across to Somit to understand the recent news flow regarding Hindustan Aeronautics, the order win, plus the MSCI inclusion probability.
Well, if you see the Cabinet Committee of Security, that is CCS, has cleared the procurement of 70 basic trainer aircraft worth nearly 6,800 crore rupees from HAL. Now, of the 70, 40 are expected to be delivered over the next 6 years. And the company had earlier indicated in the third quarter FY23 conference call that they are expecting around 55,000 crore rupees of fresh order over the next 6 to 12 months. And this order or this deal is expected to be a part of the order that they are expecting of around 55,000 crore rupees. Now, other orders that are in pipeline includes a light utility helicopter, a repeat order of light combat helicopter, and the Sukhoi upgrade. Now, this order win will help the company maintain its double-digit revenue growth from FY25 onwards also. Now, this order may positively impact the company's revenue and earnings estimate for FY25 by around 3%, and this is as per Nuvama Broking. And they're saying that it won't impact the FY23 and FY24 estimates because the deliveries are expected to start from FY25 till FY30. Now, post this order win, the total order booking expected to be around 90,000 crore rupees for the company, and this is after adjusting for the fourth quarter FY23 revenues. Now, apart from this, brokerages are also indicating that Hindustan Aeronautics as a stock could get included in the next MSCI review, that is in May 2023, and they're saying that the stock will most likely get included if the share prices continue to stay above the 2,650 rupees per share mark. And they're saying that if the stock is included, there could be inflows to the tune of close to $140 million, that is nearly 4.6 million shares for Hindustan Aeronautics. Apart from this, the company will also be considering its second interim dividend on March 10, and given the strong cash flows, brokerages are expecting a good dividend announcement coming in from HL, so keep an eye out for this stock.
Thanks, Amit, for giving us all of those details on HAL. Let's shift gears then. Stocks on the editor's radar, and we've got two candidates that we're discussing today. Let's first start off with Axis Bank. I got the official SMS as well for the transfer of business now with the Citi acquisition.
You have a Citi credit card.
Yes. And, just going by what brokerages are saying, there is, of course, that goodwill write-off that we know about, and then ROE is only going to be realized by FY26. Let's just understand your take, Nikunj.
Avan, the acquisition, because the Citibank credit card business after the takeover has contracted, maybe they've lost market share, or everybody's or the customers are going to some other brand, we don't know, but the size of the business has contracted, so the valuations have gone down. Because the size of the business has contracted, the total outgo for Axis Bank is going to be less, which means that in the near term, it's an acquisition which has come at a discount to what the earlier price was, which means Axis Bank in the near term does not need to raise capital. So that's the good bit. The bad bit here is that the credit card business is becoming extremely competitive. My first credit card was Citibank, looks like your first credit card was Citibank, but that may not be the choice for a lot of people now going forward. So can they really use the Axis Bank franchise to really take the Citibank credit card business forward? That is something which will be a work in process. It's a transition. So in the near term, no capital requirement, good positive, but the business is contracting and they will have to really put their shoulder to the wheel to scale it up. That is something which would be a real test, so to speak, for Axis Bank, because up until now, Axis Bank in a sense is trying to change its entire construct of the business. They bought insurance, they bought credit card, they're trying to do what, let's say, an HDFC Bank is doing, or what an ICICI Bank or an SBI is doing. So in the near term, I think this is going to be a positive for Axis Bank because you don't need to raise capital. That's always positive.
Okay, so that's Axis Bank, largely on the back of the Citi acquisition, understanding of the dynamics and what in the long term it means. But let's get a move on then and focus in on the auto sector. Nikunj, you touched upon it briefly earlier this morning, but now we're focusing particularly on the CVs. Given the kind of momentum that we've seen for the individual players, what's your outlook?
I think this is one space where the base effect clearly is not having an impact. And I'm looking at, see, this is the base effect, right? 2022 is because 2021 was the entire COVID adjustment. So this was a difficult year to call because of the base effect. Now this is a normal year, Avan. In a normal year, if the sector is growing at 20% plus and 20 has become 25 for the month of Feb, this is a good quarter for them. It just tells you that the economy is reviving. Why do you buy trucks? You buy CVs or commercial vehicles when you're confident of the freight business. The freight business is a function of the underlying bent of the economy. So the CV cycle is in definitely some kind of an uptrend. So while we can talk about this end of the economy slowing down, that end of the economy slowing down, this is not doing well, rural economy under pressure, but by and large the velocity of freight in India has moved. The direct freight corridor has not been as successful as what we thought, which means that the road transport, great roads, and more connectivity is something which is also adding to this entire theory. So I think if you're looking at one pocket within the auto space, which is like not a bright spot but a shining sun, I think it's CVs.
Okay, so it's CVs to watch out for, and we have seen that month-on-month growth play out in some of these players as well. But Anisha, there's lots more as well to talk about with our guests as well as our team.
Well, yes, and we'd love to get the thoughts from Dipan as well as our technical experts on Axis as well as the auto stocks. But before that, let's get in a word from the management of Axis Bank as well. My colleague Ankur Mishra caught up with the management at Axis Bank on the sidelines of the press conference with the transition happening yesterday. Let's listen into what they had to tell us.
When you announced the deal, the total consideration was 12,325 crore. Now it is 11,600 crore. Total 625 crore to lesser, if we say it precisely. So, what has been the reason of this number change? If you can explain first.
Yeah, I think the reduction is about 700 odd crores. See, when we had announced the deal, we had mentioned this, that in terms of making sure that the value preservation happens, because the moment you announce a transaction of this kind, there is expected to be some amount of customer attrition. And we were very clear that we should make sure that both parties are aligned in terms of running the business and protecting the customers as much as possible in terms of the franchise. There are 2-3 things that happened between then and now, right? One is we went through an express consent process, which is the right thing to do. We went and asked customers and we sought their consent to move. So there was some amount of attrition because some of the customers didn't want to consent. So that happened. There has also been, like Amitabh mentioned, our original base of the deposits was on June 2021. If you remember June 2021, that was the second wave of pandemic, wave 2 of the COVID. We had some of the highest deposit bases at that point in time across the banking sector, largely because the spending was not there.
Dipan Mehta, let's address the news here. The Citibank acquisition is coming, I would say, at a discount to what the original acquisition announcement was. What do you think it means for Axis Bank?
See, I think that certainly it will add a couple of percentage points to their growth rates. And I think it's a very good deal from Axis Bank's perspective. There are great cross-selling opportunities as well over here because Citibank did not perhaps have all the products which Axis Bank has got. And Axis Bank also has a very good brand per se. And this kind of an acquisition will be incrementally positive. It's not going to be a complete game changer considering the size of Citibank, but nonetheless, I think at times like this, when competition is increasing in the banking sector, and there is a great demand to go after high-ticket, big-ticket customers, I think keeping that in mind, this acquisition is very positive for Axis Bank, and you will see the results flow through itself from the next quarter onwards. And I think on the whole, it will be earnings accretive. And Axis Bank per se also is available at attractive valuations and cleaned up their balance sheet, and on the whole growth rates are good. So positive on Axis Bank, more so after this acquisition.
Okay. So if somebody has a 2 to 3 year time frame, every bank now has a very different proposition. HDFC Bank, well, it's the merger. For Axis Bank, small acquisitions. For State Bank of India, pure solid corporate growth with a promise on ROA. What is the best combination for next 2 to 3 quarters or 3 to 5 quarters if somebody is looking for one big idea from the financials?
Yeah, disclosure over here, Nikunj. The first few minutes of the marathon I ran with Vaidyanathan of IDFC First Bank, and I was there with him at the start line as well. And I think that he's one CEO in the banking sector worth watching. Extremely focused, aggressive, and has got fantastic ideas where he wants to take the bank. If you look at the IDFC First Bank numbers last 2-3 quarters, they are best in class and on almost all financial parameters. They are amongst the number one or two within the space. Valuations are reasonable. They have kept their loan book pretty much clean, having written off a lot of the bad loans which came with IDFC, and there were a lot of unusual and a lot of setbacks over there, but the company has absorbed all of it. So I'm very positive on that bank. I think it will be an outlier and outperform when it comes to growth rates. So that's where we are placing a lot of our capital in. Again, I said as a disclosure that we've been invested in this company for a long time, so our views may be biased. Apart from that, I think HDFC and Kotak Bank also should report very good numbers and would have a sense of outperformance compared to ICICI and Axis, which I think is a bit of an over-ownership situation over there.
So you bought the stock after the marathon or before the marathon?
No, Nikunj, I had bought Vaidyanathan's Capital First, and that's how I got shares of IDFC First. And I thought that Capital First merger into IDFC Bank would be very positive. But in fact, we had a long sideways to corrective movement because IDFC Bank's loan book was not as good as it was estimated when the acquisition took place. And there were many bad loans which came out over there, big ticket corporate loans, infrastructure loans, which then had to be provided by the merged entity IDFC First. And it's only now that the balance sheet is completely cleaned up, and the way they have gone after CASA and the way they have grown the retail book, I think is very impressive.
When the acquisition happened, it was a pure, very low liability franchise, and I think Vaidyanathan has done a great job in turning it around, bringing the NPAs down, dealing with Vodafone, ADA, a group of companies. There were a lot of corporate loans which in a sense they had to struggle. But the real talking point, at least this week, is back to Adani group of names. And we were doing some analysis with Kunal yesterday as to what is the positioning of Adani group of stocks. These stocks are up from the 52-week low, especially Adani Enterprises are 50%. But after you fall 50% and if you go 50%, you're still down 25%. Simple maths. Now, Kunal, let's look at the top three stocks: Adani Enterprises, Adani Ports, and ACC Ambuja. These are the three stocks where the market attention is high. They are part of FNO. On the charts, without any sentiment, without any yes or no, without any bias, on the charts for a trader, how are these three stocks looking now? What they were in Jan versus where they are now?
So on the charts, it would still be bearish for Adani Enterprise, Adani Ambuja Cements, ACC, etc. I think the only positive chart over here from the Adani group of stable is Adani Ports, which has gone through a revival as well as a very stable kind of an uptrend, breaking past about the 600 mark yesterday. Now, I'll share interesting data. Like, for example, the last 2 days, Adani Enterprise has seen as you said, more than a 50% recovery from the, I think, 1,100 mark for itself. Now, day before yesterday, when the first rise or the bounce happened for Adani Enterprise, the short covering was almost 20 lakh contracts for Adani Enterprise. Yesterday, the short covering was just 3 lakh contracts. So, which means that till the time, so a stock generally rallies into a vicious kind of an upward trend when there is a huge amount of short covering which happens. But the extent of short covering reduces, which means that the pace of rally would halt significantly for the stock price. So, won't be surprised that Adani Enterprise maybe shows a mild bit of an uptick, but then it could probably get into the negative territory today as well.
So now let's understand that graphic. Adani Port was overbought in Jan, it is still overbought. Yes. Overbought stock should not be bought. Yes. Let's move to the second one. According to your analysis, in January, Adani Enterprises were extremely overbought. It is an oversold bounce. Oversold bounce is always a dangerous thing to buy. So avoid Adani Enterprises. Yes. And correct me if I am interpreting it wrong. Ambuja Cement in the month of Jan was neutral. Now it's mildly oversold, which means a little bit of dinky bounce in Ambuja Cement can not be ruled out.
Correct.
Why is Nuresh not agreeing? Nuresh, I can see you, my friend, when we are doing analysis of Adani group of stocks. Sometimes when you're quiet, I know that you don't agree. Otherwise, you would have raised your voice by now.
So I don't look at the Adani group of stocks as a trade, and I've given up on analyzing them months and years back. The only stock, like I've said before, in the drop also, it was only Ambuja Cements and Adani Ports, which look interesting. Adani Ports has moved up a good 30-50% from the bottom. Ambuja Cement still has space. So Ambuja Cements is something which can eventually go towards the 400 to 480 mark. And say stock was 310 odd levels before the Adani takeover. Also, the prices in, say, the Russia-Ukraine crisis was around 280 to 310 zones. So at 330, that's the best trade you have in the Adani group as well as in the cement pack, because the whole premium is taken out. The rest of the names, it's very difficult to trade in Adani Enterprises when a stock goes, even in the recent term, from 1,000 to 2,200, back to 1,200, back to 1,500. Even if one analyzes, one cannot take a decent exposure as a trader, because there is a risk of a 10% move on the opposite side of your trade just out of nowhere. So no views on Adani, but Ambuja Cement still looks the most promising name.
Okay, he's given up on tracking some of those Adani group stocks. That's the outlook. But let's get in a view then, Nuresh, from you on the charts of some of these auto companies, just basis the kind of commentary that we've seen from most of them across the board. Escorts talking about pretty strong demand momentum. You have Bajaj Auto as well, where the export component has jumped quite smartly on a month-on-month basis. What are the chart readings like?
So Escorts is something which has already done really well over the last few years. Even in the near term, the stock has been holding on to 1950 over the last 6 to 8 months. The momentum has not been great. The stock was at 1900, 1950 almost a year and a half back. So Escorts and Mahindra have clearly shown that resilience in terms of corrections. Both the stocks don't correct much with the markets. For example, 1250, 1300, 1200, 1250 becomes a base for Mahindra and Mahindra. Escorts is 1950. But clearly it's the space of tractors which is really doing well. So even if you look at Ashok Leyland, which has underperformed from expectation, but the stock has just been around that 140 mark for the last many months. It has not been able to break out, but there is relative resilience. Bajaj Auto tried to make a move, went up to 3600, from 3600 to almost 3950. Is back towards that lower end of the range, almost retested 3600 mark, could make a slow recovery. But the trends are very clear. The space like Escorts, Mahindra and Mahindra, Ashok Leyland remain to be leaders in two-wheelers. It is TVS Motors, which continues to show the best charts. In four-wheelers, it's pretty muted across the board. But Tata Motors is something which we watch out for purely for the fact that 1.5 years has gone in consolidation.
Okay, so autos in the fast lane, but what's also been chugging along is some of these rail companies, and today as well, some of these automotive players will be in focus with respect to locomotive players, I beg your pardon, will be in focus because the Vande Bharat order for 200 trains seems to have opened. The total value of the order was around 60,000 odd crores, and the lowest bidders have been chosen to be RVNL, BHEL, and some other consortiums as well. Kunal, your take as well as that entire rail capex theme is concerned. Is there any stock that you would recommend as a buy?
Well, not as of now. I think the only stock from the railways pack as such which looks attractive is Titagarh Wagoner stock, which we've been bullish on earlier. I think at 157.60 approximately. That's a stock which has now moved above those 200 plus category for itself. So that's the stock which has looked very attractive and more stable as compared to the other pack. Texmaco Rail as well has gone to a correction, but the stock has not been able to surpass the previous life highs. Talking of the railway, capex stocks, the likes of Ircon, etc., these stocks have gone through a very sharp correction. So in the last 3 or 4 months, there has been a tapering off of risk which has happened, or these high beta stocks which has happened from their December end highs or January highs, as the case may be. And that's where the difficulty is, that which are the set of stocks which would rise the first and bottom out first. As of now, I would not venture out into buying these high beta stocks in the market, which is still trying to get its feet back again. So it's better to avoid the trade. The only stock from the entire railway pack as such which has been looking attractive is Titagarh Wagoner.
All right, let's just get in a view then, Dipan, from you as to what the outlook is. Dipan is Dipan with us, yeah. So
yes,
Dipan,
I'm there. I'm right.
So I just wanted to understand from you as well what the outlook is when it comes to the entire hospitality theme, the fact that we have seen a rebound with quite a bit of vengeance, and the kind of commentary as well, the kind of expansion plans that we've seen from a lot of these companies are in full throttle. If you had to zero in on picks within hospitality, what would that be?
Yeah, I think that recently I was there at a presentation made by Puneet Chhatwal of Indian Hotels, and I was completely blown away by the presentation. I think the top management had set certain targets 3 years ago, and they have achieved beyond those targets at this point of time. Clearly, Indian Hotels is a company which is on the move over here. They are focusing on capital allocation. They want to improve the return on equity, and they want to consistently improve their operating profit margins as well. And I think at this point of time, the kind of environment which they are operating in also is very, very positive. You don't get any more discounts from any of these hotels. The rooms occupancy levels are at very high levels, and the average revenue per room also is sharply increasing, more like double-digit growth rates for these companies. And mind you, Indian Hotel also is expanding capacity rapidly. The best part is focusing more on India and has set up multiple brands within the hospitality industry. So I would be extremely positive on Indian Hotels. Having said that, disclosure, we and our clients are invested, and this is perhaps the best company to buy in the hospitality space. Another company which comes to mind, of course, is Mahindra Holidays, which also has been a quiet performer and a very differentiated business model, which has not yet been completely discounted by the market. So apart from these two companies, there are smaller players as well. But I think when we are seeing these kind of conditions in the hospitality industry, it's best to go with the market leader.
It's absolutely amazing. I look at the economy. There is the rural end of the economy which is suffering. There is this middle layer which is now feeling the heat of layoffs or what is happening to the job market. And then there is the luxury and the aspirational end of the market which is just bloating. Whether it is luxury cars, luxury watches, luxury hotels, luxury travel, luxury apartments. The word luxury is now the most sought after word in terms of where the demand contours really seems to be moving. Look at Ethos. I mean, this is a company which is a branded watch retailer. Almost 1,000 rupees for Ethos. 52-week, 24% higher. Vedant Fashions, they own the brand Manyavar, 38% higher. Now let's look at the other ones, which is the middle layer. The middle layer in a sense is represented, let's say, by ABFRL. Stock's not done anything. Trent, that's an outlier, but Trent also has done pretty okay. DMart, another value retailer. You would say inflation ke zamane mein value will do well, value retailing will do well. But DMart, in a sense, is now feeling the heat of perhaps pricing. Then VMart, DMart, when there is inflation, value retail should do well. But what do we have? Ulta.
I think, Nikunj, this is a very nice short presentation which you made. I think clearly opening up my eyes that the luxury part of the entire consumption has stood up, has sustained very well and is growing at high double-digit growth rates. And that's where investors need to focus on. Specifically coming to DMart, I think it's feeling the pressure of online players over there who are prepared to burn capital to get market share. And DMart's philosophy is slightly different. So that's the reason why perhaps they are lagging in that particular segment. And when it comes to VMart, I think they are feeling the full pinch of the slowdown in the rural spending. But nonetheless, I think it's a good company, and when you see rural spending come back up, then I think VMart should do pretty well as well. But clearly, the focus has to be on companies which are offering luxury products, luxury services, and you may have a long road in terms of runway for growth for these companies, but you need to be a bit patient as well because the spends over here also can be slightly volatile.
All right. Thanks very much, Dipan, for shedding light on all of those sectors and stocks that you're bullish on, as well as just giving us a general view on the markets. Let's get in a quick view on the pre-open rates. And as we speak, it's absolutely flat for the index around the 17,433 levels. Do remember, it's the weekly expiry as well today. Let's find out mid-cap strategies. What is it that our chartists are betting on? And Kunal, what stands out from the broader markets?
So it's a stock which I think over the last couple of days specifically have been bullish on. AB Capital still looks very attractive. Now, what initially started off was more of a bullish flag pattern on the daily charts is now engulfed into more of a inverted head and shoulder pattern on the weekly time frame. So this could probably be a breakout which can take the stock potentially to its previous swing highs of 162. That's the target which I would outline for AB Capital. Stop us at 146.
Naresh, what about you? What are you recommending this morning?
So that will be a buy on Mahindra and Mahindra Financials. The stock has shown a lot of relative outperformance over the last 6 months. In the near term, it gave a breakout about 245 after attempting it 3-4 times. Made a move to 270. Came very close to the retest. Made a bottom at 250 in the last 2-3 sessions. Expecting it to again make a fresh move towards 280 plus. So the retest has done a good entry point right now. Risk reward also seems very good at this prices, and eventually I expect the stock to take a leadership move towards 320, 350 levels. So a short-term target price of 280 and a stop loss at 245.
All right, there you have it. Those are your top mid-cap recommendations being flagged off by our charters. But let's do some analysis in terms of the trend that we've seen on the index. And incidentally, the Nifty has never given 4 consecutive months of negative returns in the last 2 decades. In fact, the record will be put to test in the month of March with both FIIs and retail investors turning their backs on the street. Let's get in more insight and just map out the kind of trends that we've seen on the index. My colleague Sharad is here to do just that. Sharad?
Well, yes, we did an analysis of the last 2 decades as well, and the most important thing is coming is after every 3 consecutive months of Nifty fall, in the 4th month itself it expects to rise. Now, out of 9 times out of negative returns which we have seen over the last 3 months itself, they have turned positive in the 4th month. Now this is coming in out of 8th out of the last 9 instances, and we can see the importance of this. And of course, apart from this, what happens in the 4th month? That is the main question to be answered, and the average monthly return which we have calculated comes in at a positive return of an average rate of 7% going ahead, and the highest being almost 15% seen in the month of April 2020 itself. And lastly, Nifty has actually fallen, if you see over the last 3 months itself, falling by almost 6.6%. And this is the 9th instance of this happening. Now, do remember, the important case for chat remains is, will March 2023 be a positive month for it?
So intriguing. That is so intriguing. It means that if you are, and by the way, the instances what Sharad just spoke about, they were special situations. These were extraordinary, challenging or tumultuous time for the world or for India per se. Now imagine if that is the scenario, and currently what is the scenario? Now we may talk about the mathematical number and say that Nifty has not given you 4 months of negative returns in last 20 years. But what we are missing here, Kunal, is actually the quantum of fall. We've not had a quantum of fall. I mean, last 3 months, what has been the quantum of fall?
Yeah, 2.5% is the average fall per month.
Exactly. So you may say that, okay, 4 months Nifty has not fallen, but the 3 months where it has fallen in the previous occasions which we are comparing, the quantum of the fall has been significantly higher. So does this data work?
Well, this data has worked for last 20 years, but then there is no sanctity. As you rightly said, the magnitude of fall is the most important, because when a fall is getting stretched to the 3rd or the 4th month, the effect of those fall is very, very sharp and severe. Now, in fact, this data could probably be, if we extend this data to the start of the Nifty 50, which is in, from 95 plus time frame, then there have been actually 3 occasions where the Nifty is actually fallen by more than 3 months consecutively, and those months have been the 4th and the 5th month have actually been some the markets have seen some dramatic correction in the 4th and 5th month. So we can just hope and expect that the data which has panned out the last 2 decades from 2002 onwards, let's hope that that pans out rather than any kind of a correction which extends for 4th or 5th month, because history suggests that whenever the 4th and 5th month the correction is extended, the corrections have been very sharp and vicious.
Okay, let's see which way March 2023 is likely to pan out. Is it going to be a month where it recovers after 3 months of decline, or is it going to be a sharp cut is what we are going to witness? We'll wait by and see. But time now to run you through some top national and international headlines. Well, the counting of votes is underway for 3 northeastern states this morning. BJP looks to consolidate its gains, taking early leads in Tripura as well as Nagaland. Its former ally, Sangma's National People's Party, is ahead in Meghalaya. Meantime, billionaire Mukesh Ambani is getting into genetic mapping, looking to make a healthcare trend led by disruptive US startups like 23andMe more affordable and widespread in India's growing consumer market. The energy to e-commerce conglomerate will roll out within weeks a comprehensive 12,000 rupee genome sequencing test as well. The G20 foreign ministers meet is scheduled today in Delhi. The US Secretary of State Antony Blinken, Russian Foreign Minister Sergei Lavrov, and Chinese Foreign Minister and other high-level diplomats will participate in the meeting. It's a huge diplomatic moment for India as the meeting is taking place amid the Ukraine war and rising US-China tensions.
Moving on then, you've got the Greek Prime Minister who's admitted that the train collision which claimed 43 lives was a tragic human error. The initial probe suggests that both the trains were running on the same tracks, though reason is still unclear. Amid the protests, the Minister of Transport has resigned on the back of this accident. And it's a disappointing day for India as Australia are ahead in a game as they led by 47 runs with 6 wickets in hand. The Indian bowlers would look to exploit the spinning conditions. Meanwhile, you've got Umesh Yadav surpassing Virat Kohli and Ravi Shastri's batting record. Harmanpreet Kaur, meantime, will be leading Mumbai's India team for the captain of the Women's Premier League. Meanwhile, Mumbai India will play against the Gujarat Lions in the opening match of the Women's Premium League.
Okay, what's the outlook as far as the index is concerned? Because for now, the pre-open rates are suggesting we are likely to open close to the 17,400 mark, and the Sensex too showing a shade of red with a cut of around 120 points. But Kunal believes that one should book profits despite the negative open perhaps. Nuresh believes that if there is further dip, it could provide a buying opportunity, and there is a similar view coming in from Santosh Meena. So the consensus seems to be that buy on dips is what our technical experts are suggesting as far as Nifty is concerned. Similar picture coming out of Nifty Bank. Kunal believes that after the short-term run that we have seen in the Bank Nifty over the last couple of days, it's time to book profits, while Nuresh as well as Santosh believe that buying on dips is the best strategy for Nifty Bank.
One frame, because it's rare that they don't agree on one call, because it's a very different call what both of them have. So Nuresh, buy on dip. Kunal feels it's book profits. Very, very different approach today. Nuresh, let's understand in 30 seconds, why should one buy the dip?
So yesterday was a strong recovery day, indicating that a short-term bottom could be in place around 17,250, 300. So a dip of say 50, 80 points, say closer to that 17,370 would become a risk-reward trade. I think Kunal has a book profit because he got the call right yesterday by a buy to be done yesterday itself, and there has been a good bounce from yesterday's lows.
Kunal, why won't you extend your? I mean, if you got the Bank Nifty right, which you did I think 2 days ago. Why wouldn't you like to stretch it? Because we were oversold, and from oversold we just got one dinky bounce. Why not just extend it?
That's exactly the point you mentioned, Nikunj. It's a dinky bounce. So when you're playing a bounce, you don't expect too much of a hurrah coming into the price action. Look at it this way: that the markets have fallen 8 days, 9 days consecutively. So a bounce which has already shapen up the last 2 or 3 days. I think we've seen the effect and the confidence coming back yesterday. Maybe the confidence could trickle for another day, but maybe 400, 500 points at 41,000. I think it's a classical level to book out profits.
Now look at that screen which captures the Adani group of stocks. So just for traders who want to understand that technically what the setup is, it's not something on fundamentals or where the growth business is, what the valuations are. This is pure hardcore technical understanding. Adani Port in January was overbought, and after the bounce it is overbought. Adani Enterprises was extremely overbought and now has seen an oversold bounce. Of course, Kunal's proprietary data. And then Ambuja Cement was in neutral territory in Jan, and now it is mildly oversold. So the word dinky bounce for Ambuja Exports still holds. But Adani Port was overbought, is still overbought. Even though the correction has happened, we've seen a lot of volatility, I guess, in some of the stocks. So each one to their own, but this is what our technical experts are indicating when it comes to the Adani group of stocks, pure technicals per se. First rates, it's a Thursday, and are we likely to build on the bounce what we have seen, let's say on Tuesday and Wednesday, or it's going to be one of those days where we run into resistance? Global cues have reversed completely. There is very little global support coming our way, and you cannot have durability in this kind of a market if you don't have too much of global support per se. So first rates, just a second, just come up on your screen, and I'll let the clock do all the talking. You would definitely be watching out for some of the consumer tech names. You would be watching out for Paytm, where there's an official denial which has come now. Adani group of stocks, will they continue to build on? Names like Zomato, are they likely to scale up further? Not too many stocks in news. You will start with the Bank Nifty, the Sensex, and the market breadth. The market breadth is good. The Bank Nifty is just flat with a downward bias. The auto dispatch numbers all of them have come in, and the surprise there is Ashok Leyland, if you ask me. Eicher CV business, which is small business for them, so the rub-off effect may not be there, but Ashok Leyland, I think numbers were decent. RVNL, I think, is the newsmaker. They have got nomination. It's really the order news which I think is helping RVNL there, up by about 8%. You got Adani Enterprises down 9%. These are crazy. These are crazy moves for Adani group of stocks. 10% down, 10% up, 10% down, 10% lower. Just so much happening there that it's dangerous now even to talk about them. Vedanta, 1% higher. You got Adani Power, which is 5% higher, and you've got no price change in Zomato, and you've got a little bit of price uptick which is there in Yes Bank now. But the real star today, I think, is RVNL.
Oh, well, yes, RVNL is up around 8% on account of that news. Let's pull up BHEL as well if that one is reacting because it's a similar news flow. That's the L2 bidder. So, yeah, it's just a sentimental uptick on that one. KNR Construction also back in order. So, that one is flying higher. Electra Green Tech has been on a tear since that green hydrogen bus announcement was made. And yesterday as well, there was a positive news flow. So, that's trending higher. You also have Suntec Realty reacting positively to that latest deal that they have signed as well. On the losing side, as we pointed out, it's Adani Enterprises that really deserve mention. 10% cash down coming in on that one. ACCA, Adani Ports are the other top losers. Sectorally speaking, it's autos, which is actually doing quite okay. Bharat Forge on account of that order win is also high by around 1%. Hero MotoCorp is reacting to a good set of numbers. So overall, a decent start coming into the Indian markets. And even if you look at the advance decline ratio, it's firmly in favor of advances. So that market breadth continues to improve. And it's the Nifty Bank which is managing to hold into the green, while the Nifty has just marginally slipped into the red. Let's get the first trades going then as well. Kunal, what's the trade that you are executing or spotting at this point of time?
So that's IEX, a stock which I think has done reasonably well over the last couple of days, trading at 146 approximately on the spot level. So that's a stock which I would look to buy.
All right, IEX, and that's what Kunal is looking at. Meantime, Naresh, let's get in your view as we're circling around the 17,430 mark and nothing happening with the broader markets either.
Yeah, so continues to remain flat, but on dips there's a buy. Mahindra Finance is what I continue to like. 252 to 255 is the zone which I continue to accumulate, expecting a bounce here in the near term.
Okay. Sanjeev Prasad